Corporate decisions and market trends may feel like distant events, but they have a direct impact on your daily financial life. From corporate mismanagement to breakthrough innovations in technology, these developments shape how you spend, save, and invest. In this video, we'll explore 7 key examples of how businesses and market trends are influencing your finances and offer actionable steps to protect and grow your wealth in response to these changes. Macy's recent announcement that an employee hid $154 million in expenses, delaying third-quarter earnings, has shaken investor confidence. This type of corporate mismanagement can lead to drops in stock prices, eroding shareholder value. For employees, scandals like this create uncertainty, impacting morale and job security. For consumers, the company may attempt to recoup losses through cost-cutting measures, such as reduced discounts or services. For investors, this highlights the importance of monitoring corporate governance. When companies fail to manage their finances transparently, it often signals deeper operational issues. Even loyal customers may hesitate to shop at a brand associated with financial instability, further weakening the company's position in the market. To protect yourself, research the financial health of companies before investing. Diversify your portfolio to avoid over-reliance on a single company's performance. If you're a Macy's customer, watch for potential price increases or changes in return policies that could affect your spending. If you're an employee, consider updating your resume and keeping an eye on industry trends in case instability leads to layoffs. Supermicro stock has surged nearly 80% in the past week, catching the attention of investors looking for quick gains. While such rapid growth may seem like a lucrative opportunity, it also signals heightened risk. Stocks that experience sudden spikes often face corrections, which can result in significant losses for investors who enter at the peak. For long-term investors, the volatility of high-growth stocks like Supermicro underscores the importance of understanding market dynamics. While the company's performance may reflect genuine growth potential, speculative trading often inflates valuations, leading to instability. This is especially true in tech-driven industries, where trends can shift rapidly based on innovation or market sentiment. To navigate this, avoid chasing hype-driven stocks without conducting thorough research. Assess whether the company's fundamentals justify its valuation. Diversify your portfolio to mitigate risks associated with high-volatility investments. For those considering short-term trades, set strict stop-loss orders to limit potential losses. Rumors of a possible PlayStation 5 portable have ignited excitement among gaming enthusiasts and industry watchers. If released, this innovation could drive a surge in consumer spending, particularly among younger demographics. Gaming has become a major economic force, with consumers willing to spend heavily on cutting-edge technology and immersive experiences. However, such trends often lead to increased competition among gaming companies, which could drive prices down for consumers, but also create instability for investors. Additionally, consumer spending on luxury items like gaming consoles often shifts discretionary income away from savings or investments, especially during economic downturns. For consumers, the key is to budget wisely. If you're considering a major purchase like a gaming console, evaluate whether it aligns with your financial goals. For investors, this trend highlights the growing importance of gaming and entertainment stocks. Research companies leading in this sector and consider diversifying your portfolio to include high-growth opportunities in gaming. Apple's announcement of record-low prices on the 10th-gen iPad for Black Friday reflects the larger role of holiday spending in consumer electronics. Black Friday and holiday sales drive significant revenue for retailers, influencing broader economic trends. However, while these deals provide opportunities for consumers to save, they can also encourage overspending and impulse purchases. Retailers often use these events to clear inventory, which can lead to steep discounts on older models. For consumers, this is a chance to secure valuable items at reduced costs. However, it's also essential to recognize that not all deals are as good as they seem. Many sales focus on creating urgency, encouraging purchases that may not align with actual needs. To take advantage of these sales without falling into financial traps, create a shopping list and budget before hitting the stores. Research products and compare prices to ensure you're getting the best deal. For investors, monitor how companies like Apple perform during the holiday season, as their sales figures can provide insight into broader economic health. Samsung's announcement of a potential surprise processor for the next Galaxy Z Flip highlights the role of innovation in driving consumer spending. Cutting-edge technology creates demand, especially among tech-savvy consumers, but it also increases competition among manufacturers. For consumers, this can lead to frequent upgrades and higher spending on the latest gadgets. While innovation fuels economic growth, it also puts pressure on consumers to keep up with trends. Companies like Samsung often invest heavily in research and development, passing some of those costs on to consumers through higher prices. Meanwhile, investors see opportunities in companies that successfully capture market share through innovation. To navigate these trends, consumers should focus on evaluating whether new technology meets their actual needs. Avoid the urge to upgrade immediately if your current devices still serve you well. For investors, consider diversifying into tech stocks that demonstrate consistent innovation and profitability. Be cautious of companies overly reliant on a single product line. Live updates from the Dow Jones, S&P 500, and Nasdaq reveal ongoing market fluctuations that directly impact retirement accounts and investment portfolios. While market growth benefits investors, periods of volatility can erode returns, especially for those nearing retirement or relying on investment income. Market trends are influenced by various factors, including corporate earnings reports, geopolitical events, and Federal Reserve policies. For individuals with significant market exposure, these fluctuations can create anxiety, leading to impulsive decisions that harm long-term financial goals. At the same time, those outside the market may find entry points too expensive, limiting their ability to build wealth. To protect your portfolio, maintain a diversified investment strategy. Rebalance regularly to ensure you're not overexposed to high-risk sectors. Avoid panic selling during downturns, and focus on long-term growth. Consider working with a financial advisor to create a plan tailored to your risk tolerance and financial goals. Germany's November IFO Business Climate Index highlights the global nature of market trends. As one of the largest economies in Europe, Germany's business climate affects international trade, which in turn impacts U.S. markets. A weaker-than-expected index indicates reduced confidence among German businesses, potentially slowing trade with the U.S. for American companies reliant on exports or global supply chains. Shifts in Germany's economy can lead to reduced revenue or higher costs. This can trickle down to consumers in the form of higher prices for imported goods or reduced availability of products. For investors, global economic trends influence market performance, especially in multinational corporations. To prepare, consumers should focus on buying domestically produced goods when possible to avoid price hikes. For investors, consider diversifying into sectors less reliant on global trade, such as domestic services or technology. Keep an eye on international market reports to anticipate potential shifts and adjust your portfolio accordingly. Corporate decisions and market trends play a critical role in shaping personal finances. From tech innovations and holiday spending to market volatility and global trade, these factors influence how much we earn, save, and spend. By staying informed and applying the strategies discussed in this video, you can navigate these trends with confidence and protect your financial future. If you found this video helpful, don't forget to like, subscribe, and comment with your questions or thoughts below.